Greetings, this is Dr. Jeffrey Scott, and this is my weekend market update. Well, I'm out on the West Coast at an IBD meetup joint San Francisco meeting, which I try and get to as often as I can. It's a bunch of great traders, and this is just such a fabulous event. We had Mike Webster today and Charles Harris from investors.com, IBD, O'Neill fame. Great speakers. By the time you get this, it'll be the 28th, since you're on the East Coast mostly, and I'm out here on the West Coast. Already is the 28th. Again, on the road, so I don't have my usual microphone. So if it's not great, I apologize. I did stop by Micro Center, my happy place, and bought a new one to try it out, since the one I brought before wouldn't connect to my computer. So today, I title this Topping is a Process, Bottoming is an Event, and Where Are We Now? Again, September 27th or 28th, depending upon where you are in the world. Jeffrey Scott, marketmripro@gmail.com. Google Group is Top Down Trader. And, it's embarrassing that I'm in the tech industry and I've never had my own website. We're going to launch the website this week, marketmripro.com. I'll mention it on a video or in the Top Down Trader group when it launches. You'll be able to order things there. And right now, there's not much there. But over the next couple of weeks and months, we'll be moving content there and a lot of educational material. So excited. Thanks to Praveen for that. As always, anything I present is education and purpose only. I'm a physician. I'm not a registered investment advisor or money manager. I manage my own funds. Like I can drive my own boat, but I'm not really licensed to drive anybody else's boat or to tell you what to buy. The intent of the video is to demonstrate how I use my tools for top-down investing. Trading involves risk. You're only solely responsible for any investment decisions you make. I'm my owner intend to buy or sell any stock I mentioned in the report. Trading stocks and options should be considered risky. You should always consult with your financial advisor before making trades. And as people know, I have tools in multiple platforms and am an independent trader. If you're looking for the wealth charts video, I'll have one done by Monday morning and it'll be posted. I'm not traveling until Monday back home, so I won't have to worry about not getting it done sometime early Monday or late Sunday evening. Just reminding everybody we're a month out from the Florida event. Kind of disappointed in the live attendance, so anybody that wants to come, really love to have you. Probably reasons for it. Have had bigger turnouts in the past, but when I decide to schedule it, I commit to a minimum number of people, and whether I pay for it or enough people show up to cover the cost, I'm still having the meeting. So less is good for you guys, and I'd rather have more. But that's okay. I look forward to it. 2 days live trading and education. More particulars, October 26th and 7th, Marriott Palm Beach Gardens, 2 packed days of education software instruction. 1250 includes all your meals. Hotels $155 a night. For more information or reserve your spot, please contact me at marketmripro@gmail.com. Now, if you register and you pay, you automatically turn on a $400 rebate. So if you don't have the product, you will be able to purchase it for $500 off. If you already own other products of mine, you get an extra discount based upon what you own. So I give you credit for some of your past purchases and you can get it down significantly. The other thing is John Person, I think, still has seats available for his meeting. His is Friday and Saturday. Mine's Sunday and Monday, so we both get one live day. I'll be at his meeting on Saturday and, kill two birds with one stone, or two educators, just don't kill us. And I get 4 days with one airfare. All right. Google Groups called Top Down Trader. Welcome people to join. It's free. You get that extra $100 discount on my tools. Just go to Google Groups, click all groups, find the group you want to join, click join, and then link your profile and tell us how you want to be contacted. Why do I always ask about a recession? Because we're going to get one. Whether we get one in the remainder of this year, I highly doubt. Do we get one next year? That's kind of the weakest year of the second term of a president. He doesn't have the same incentive to spend to get reelected. Although living in South Florida would not shock me if he ditches his vice president candidate and tries to get Donald Jr. in. But that's a different story for another time. As far as is there a recession, upper two are yield curves. This is the 10 minus 2. To the right is the 10, excuse me, 10 minus 3 months on the left, 10 minus 2 years on the right. Every time you cross below the black line, which is a zero line, when you get back up, eventually you get a gray bar. Those gray bars are recessions. It's pretty easy for me to see going back to the 1980s that whenever we cross below the zero line, it is followed by a recession. But often there's a significant period of time when you first cross till you actually get the recession. So do we have a recession in our future? Absolutely, yes. Is it tomorrow? No. Do we see any evidence of credit tightness? We do not. And the Philadelphia Diffusion Index came out on the 18th, so it just came out, and it was very positive. In fact, it beat to the upside, showing good economic activity. So no recession in our future anytime soon is my bet. And why does that matter to a stock investor, trader? Because bear markets are very different in a recession than they are in a secular um, strong market. And to see 50% drawdowns is not impossible. That's why I worry about if and when we have a recession. Know your news and earnings. On the left are arrows of Fed heads. As you saw this week, this past week, not all the Fed heads are in alignment about what we should do. We heard everything from Murin wanting big cuts and to get us to 2% right away. We heard several people say, not sure we need any more cuts, and most were in the middle. So I think there's still some Fed risk of disappointment. Not giving us the cuts that people want would be that disappointment. On the right, you could see we got jolts, we got housing, we got Chicago PMIs, we got ADP employment on Wednesday, jobless claims on Thursday, and the monthly employment report on Friday. And that's a big one. That's a very big one. So, and then I think this might be the first read of consumer confidence for September. And if it comes in weak, that's a big deal too. So there's plenty of news this week to continue the volatility, although hopefully the market will look very different than it did this past week. Um, you know, I look a lot at what I'm doing and how I'm doing, and it was a relatively flat week at the end of the day for my portfolio, but boy, to get there was a lot of ups and downs. And Friday brought me home and got me back positive on the week, but it was relatively flat with lots of volatility. Earnings this week, there really are not many. However, it's a judgment call to hold stocks over earnings dates. If you own one of these, it's bad judgment to not know when your stock's earnings date is scheduled. And by the way, this is not the most inclusive list. There could be things that we're not identifying here. Signpost of a top. We're going to look at markets in detail and try and guess where they're going. I always like to look at a three-road scenario. First row simple. What we saw, the pullback in the 17 days was it. And we go on and we coast into November, December, get through October, which could be a mixed month, but typically positive, and end the year at all-time highs. That's the high road scenario. The low road scenario is not, it was just a basic oversold bounce on Friday, and we're going lower, and we're going to break through the 50 and go much lower. I don't think that's going to happen, but it's not impossible. And then in the middle is we consolidate here, which I still think is a possibility. So we'll look at it. You know, I title this that tops are a process, and they really are. They're a series of events that occur and patterns that occur. Unlike bottoms, which can be an event and you get a big V bottom as we did off that April 7th. That was, I think, the follow through day. So we've been in an uptrend since April 7th. So that gets us to 5 months without hardly any pullbacks. We have a confirmed Hindenburg Omen signal, which is a traditionally calculated in the NYSE. It's sort of a sign of the smart money selling, the dumb money us buying. It's a volatility, and it typically signals the end of a bull run. We have all kinds of negative divergences, AD line divergences. Increasing number of stocks divergences. I use an old program stock finder, which I can apply any index to, and I count up the number of MACD divergences as a clue. They got better, so we're less than we were. 13-week new high, new low. It's a short-term indicator of a market reversal. We came off of a high there. Large caps, small caps. Well, we've had so much rotation, it's hard to know what's leading. But certainly we got these days where the large caps are way outperforming the small caps. I think that's reversed here. I think we're going to see the small caps lead for a while. We'll talk about my buckets. A top might be the bucket shift to the left, but we actually saw a shift to the right this week. Increasing number of distribution days, high volume days to the downside. And, I kind of look at the source for that to be Market Smith. And so I'll always look at Market Smith, and it tells me here 4 distribution days on the NASDAQ, 4 on the S&P 500. As we continue to not have a distribution day, if we continue, some of those days will fall off. But 4 is getting concerning, although you could see Market Smith is suggesting 80 to 100% exposure to stocks. I look it up on volume and down on volume every day. It's very important. Strong day. And I look here at the volume. It was not a big volume day. NASDAQ volume, NYSE volume, both more than 10% less than normal. So one of the things that I'll look at for these signposts are going to be the market surge. I used to call it Market Smith, and I may have called it Market Smith. Mike Scott introduced us today to his 4% volatility rule. If you see a move over 4% in an index, it's unusual. It typically occurs mostly in bear market rallies, but that could be a sign that we're topping. And then if you start having a lot of long setup failures, all I'm hearing at this meeting is how breakout from a lot of people is that a lot of their recent breakouts are failing. That could be signpost of a top. And then from the Ian world, a Eureka, which is a exciting, it says we got a new bull market that occurs at lows. When you start seeing them at the tops, it's a little bit of an exuberance. And the Phoenix is the bearish equivalent of a Eureka. And then bingo days, which are babies out with the bathwater. Frankly, we're not seeing a lot of these things, or they've been improving. So maybe we're not at a top. All right, on to the charts. And then hope to see you guys in Florida, not next year, but next month. And, I put up this one here. I've held meetings there in the past. That's the Singer Island Marriott Resort. It's great if you bring your loved ones. It's 10 minutes from the hotel we're using. It's a lot more expensive, so that's why I'm staying at the one that's inland. But if your family wants to come and get the last, few rays of sun left in their summer vacation, which is already over, October and Florida can't be beat. Rains a lot, but that's a great hotel on a great beach. All right, so let's pull up Market MRI Pro. Welcome to those men and women that I met here at the IBD meetup. It's always nice to meet other like traders, and that's partly why I go to this meeting. Who knew last week I was at a VectorVest meeting and met some new friends there as well. I'm a top-down guy, which means I'm going to want to understand the market first, try to understand what the leading sectors or industry groups are, or the leading industry groups and the leading sectors, and then try and find some of the better stocks in those leading industry groups. And so one of my followers, Praveen, actually built an application, the Market MRI Pro tool that we'll be using today, that really helps me get this done quickly. Now, I tell people I can do my nightly analysis in 20 to 30 minutes. That is not a lie. In fact, I can probably do it less. But when I do videos, I talk too much and I have to teach. So it takes longer. So if we look at the daily performance, and we rank by one-day performance, it was a strong day. Russell was up 0.86, finishing at the top of their range. That's great. Over 5 days, it was down just a bit, 0.66. The diamonds were up 0.62, more in the middle of their range, but they were also down 0.13 on the week, really mild decreases. Spiders was up 0.57, was down 0.28 on the week, finishing at the top of their range. The Qs were up 0.41, down 0.56 on the week, again at the top of the range on Friday. Bitcoin, which has had a tough time, was down a bit, was down over 5% over 5 days. And the dollar, which has showed some strength, was up 0.62 on the week, but was down 0.36 on Friday. And volatility was actually only down 1%. Not a big move on anything this week. The only thing that moved much was Bitcoin. And if you own any of the derivatives like MicroStrategy, you obviously felt that. If we look at the 52-week or 12-month new highs and new lows, there was no spike in new lows. Frankly, the new highs came down as well, but we're still positive new highs minus new lows, but at smaller numbers. Now, I tried to figure out if we had any of those fancy breadth trusts, VIGs and others. We didn't have any breadth trusts that I could find on Friday. However, if you look at the number of advances, back up to 83% in the S&P 1500, 58% on the NASDAQ, 72% in the NYSE. We were in the 30s earlier in the week, including Thursday. So that's a pretty big rebound. The top is in each of these industry groups is a percentage of sectors up, and we saw a big reversal there and a big reversal number of industry groups up. So no traditional breadth thrusts, but certainly a super strong day despite the averages being kind of boringly strong. If we look at one-day moves, you see materials led with 1.16, communications next, and then energy. What lagged? Discretionary, healthcare, utilities, real estate. Technology was relatively flat, up 0.3%. If we look at the 5-day move, we can see leadership in energy and utilities. Think electrical transmission and data centers, because they've still been doing very well, although the other utilities are starting to join them. And the laggards on the week were materials, staples, healthcare, and communications, which have been a big leader. And on the 5-day change, you're down on technology 0.03%, relatively flat. If we look at categories, 1-day category leadership, silver, biotech, gold, infrastructure development, biotech, copper, home construction, aerospace, defense. And then the next one is esports, probably because of the electronic arts take private talk that's going on. So that gives me an idea of what's going on in the market. Decent close of the week on a modestly down week. A lot more participation, improvement in breadth, not a lot of new highs and new lows. And the cool thing is this will sit on one of my monitors all day, and all I have to do to update it, and it will update during hours super quick. Our data feed is real time, but we don't stream. At least we don't stream right now. It's under discussion. I like a timing model to be objective, not subjective. So I have an objective model. It involves two different signals. It involves a bongo, which is a trending indicator that I developed with some of my friends on behalf of Ian, and then a WMA and the relationship of price to that WMA. And then the buy sell line is on the bottom. So you could see that we've continued in a daily buy starting on September 9th, despite this being September and supposedly a bad month. We're continuing on the Qs as well and along. The Russell's been long since the middle of August, and it's had a great run to get back up to all-time highs. And then the diamonds also in a buy. So on the short-term model says, hey, you should be long this market. Notice how we pulled into that WMA, but more about that to come. If I look at the weekly buy signals, they're also all long. So I could be as nervous as I want to about the general market, but objectively, my monthlies are all in a long. My weeklies are all in a long, and my daily. So I got to be long this market. I can't be short. Now I'm going to use other things to temper my enthusiasm, but the overall timing model says be long. If we look at the US ETFs, let's just blow them up one at a time. How can you not love this run? This is like the quintessential V bottom that occurred on or about April 7th. And, It's probably starting to slow down a bit. I mean, you had the biggest move, and then the next one is a little bit slower, and this one's probably a little slower. But it's a strong move. We pull back and touch the first line of support, which is that green 17-day moving average. Let's take this um, EMA out so it doesn't confuse. All right. So you could see you want to delete, yes, hit OK. Pull back to the 17 and a nice bounce on Friday. And the best news here is this is your 10-year seasonality. This is a daily chart, and we're about done with the negative seasonality. Woohoo, that's a positive thing. Um, if you put all the years to date, and this goes back to the beginning of the year, this is just the pattern it was predicted. But from this date on, it's this green line. So I'm not bearish when I look at this. I thought this was the first line of defense. Watch my videos from last week. Another couple percent takes us to the 50. I did not see us breaking it. This is also what John Person would call a high close doji, and that's a bullish candle. So, or is that you could also probably say it's a morning star, also a bullish setup. I think we go higher here. I really, parts of my mind think, don't say that, but it feels like we go higher here. The Qs, again, beautiful V bottom, straight up, and again, slowing down the pace, which is okay. Pull back into that 17-day simple moving average. And again, we're getting out of the negative seasonality. I can't believe we may be getting out of September unharmed if we don't sell off in the beginning of the week. So I look at the Qs. Market model says be long, chart says be long. Don't ignore where we are, and I'll show you reasons, things to not ignore, but hard to argue with the model. Look at the diamonds, same thing. Beautiful, beautiful channel. Seasonality is improving. Hallelujah. Pull back to the 17 and reversal. It's like a broken record. Everything looks the same. And one thing that does worry me a little bit is the Russell set a nominal new high here, and then it's come down each bar. It too bounced off the 17. It too has better seasonality coming. And I just look back at the last new all high, and that was a high that stuck with us since November of 24. So I just hope we turn around and go back up and retest soon on the Russell. That one has me a little bit more nervous than the others, and I'm happy to see that seasonality is no longer pointing down. So the markets were flat. I think we saw volatility was flat. If we look at the VIX futures, let's just look at the week on the VIX futures. They came down some on Friday. And if you look at the weekly on the VIX futures, you could see tried to go higher. It didn't. It actually closed at the bottom of the range. And the VIX futures were down 1% on the week. And if we look at the dollar, I like the weekly as well to look at here. You could see on the weekly dollar, closed above this line, came off the all-time the highs. We're still consolidating after a big fall. And if we look at the daily on Friday, we could see that we actually had an inside bar, but at the lower part of the candle. So kind of a bearish looking candle there. All right, what about commodities? Gold has been super strong. I gave my gold call on a weekend review. Again, it wasn't that difficult. I took the horizontal tool. I touched the top of this candle and it drew that line, and I said, I'm buying gold here. And I did. I actually usually buy gold miners. I had El Dorado and Kinross, and I decided to buy GLD, and I bought a fair amount, and it's been a nice run. Taken some profits because who knows where it's going to go. It's just off all-time highs. So gold has had a huge run. Anything bearish looking about that? Not unless you think of it as a counter to a bad stock market. Gold looks good, and I think we have an economy that's humming, apparently. And if the economy is doing well, then maybe we don't get stagflation. And maybe we see the Fed continue to cut in a strong economy. I don't see a recession imminent, so inflation is going to go higher. Sorry about that. I think I said something that stimulated my computer to talk. But I think inflation is going to get worse, and that's good for gold. Rate cuts good for gold. Silver looks like it's an all-time high, but anybody that knows silver knows this happened back here. So it's not close yet, but it's the closest it's been in a long time. This one's really been performing well, and I mean, I wouldn't fault anybody for being an SLV or buying silver miners. Now, these both gold and silver miners, to be fair, have had a big run. They're both getting extended, so you have to be careful. All right, let's go look at the buckets. Looking at distribution of stocks within their Bollinger Bands, and then how many are below and how many are above. You could see the big drop from where we were yesterday. On Thursday, we had 17% of the NYSE was below the bands. On the S&P 500 was 21, 16 on the Russell, and just 9% were below the Bollinger Bands. Well, if you're supposed to be within the Bollinger Bands 90% of the time, and 20% of a stock market starts to fall below, you know you're getting stretched to the downside. And so you had a short-term reversal. That's what we had. And you could see, I call it a shift to the right, where we reduced the stocks at the bottom or below the Bollinger Bands and flipped and grew the numbers at the top, broken out by index. Market breadth is something that's very important to me. We sort of had an opposite day, equal and opposite to the prior day. This had a tail here, this had a tail here, but the bodies are almost the same size. So you could say that we're kind of in this is the NYSE composite, that we're in a bit of a flag. Volume wasn't great. This is stocks above the 20 in green, 50 in white, 200 in red. If anything, neutral to weak there, not at a high point where you'd expect a reversal because it's stretched. Here's the NASDAQ composite.
Reversal day. I think my battery already died. Well, if my vocals got worse, it's because my battery died on my headset, and I think I got flipped over to the other. No, sometimes these headsets will turn off automatically. Let's see if that's the case. All right, I'm back. That's a setting.
I have to change now that I know that it's in there. All right, so you could see on both the NYSE and the NASDAQ, stocks above the moving averages are in the middle. They're not strong or weak. New high, new lows were positive. AD lines finally turned positive. We had a number of negative days on the AD lines. And the up-down volume was positive. Super strong day on Friday. The indexes didn't move, but most of the stocks did, and they were higher. Things like the Hindenburg Omen, Eurekas are all found in this lower thing, as well as a proprietary indicator that Praveen created, which is called the defibrillator. And when do you use a defibrillator? You use a defibrillator when somebody is dead. And when did it fire? It fired the trading day after I said we hit an all-time low, or 2 days later. That is a great bottoming signal. You don't want to see that because it means you've had a major bottom. So nothing new on the breadth, and perhaps less negative than it was before. If I look at market breadth, new high, new low, 13 weeks, I'm looking at this green box here, 0.81, 0.54, 0.68, 0.71. I got the spiders, the NASDAQ composite, the Russell, and the S&P 1500. None of them are at have moved so much that they're now overbought. And I'll be looking now to see if we've reversed some of the negative divergences. I think it takes more than one day up to see that. So I'll put it all together. My model says go long. I don't see anything that says anything different. Obviously, this market's had a long run. It could still be in a topping process. You could still get that swan moment, that black swan. But if you look at my portfolio, you're not going to see any contra ETFs or shorts right now. You'll see a lot of short calls, but they'll be part of spreads. It'll be a long position. So that means I have a long call at a lower strike price. So that's what I see of the market. If I go and I look at ratio charts and see over any length of time what the leadership has been, and it's still technology and communications, energy's made a big move. And that's probably the take home on this, is energy has made a big move. So then I'll go to the JAS layout. So I am a top-down guy. I will find the Jeffrey list, the impulse list rather. I'm using the JAS list. You can pick whatever list you want. The JAS list includes every stock in the NYSE, NASDAQ, and the Amex. And then I filter it for $1 and 100,000 shares, and 3748 stocks passed my filter today. So we can see that those are down here, that number. And then the top down will take every one of these stocks and stick it into an industry group or a sector. So pretty impressive here. Every sector was up. If I just look at sector performance, healthcare, basic materials, and industrials, I'm going to look at 2-day momentum. And the leadership was industrials, healthcare, and energy. Now, when I click that, you can see there's 1,419 stocks out of that 3,700 that are in these three sectors. These are only the industry groups in those sectors. Let's do the same 2-day momentum ranking, and let's take the top 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So now I've identified the 266 stocks in the top 10 industries in the top three sectors, top down at its finest. Then I'm going to come in here and I'm going to restrict have to be above $5 and 500,000 shares. I'm down to 137. So now I have many different ways that I can analyze this. I can rank them by that same short-term momentum and look at the best ones. CRS. This is actually one I like. Carpenter, it's a specialty steel manufacturer. So you had a big move up. It's kind of complex looking to be a flag, but it's still, I'm going to treat it like it's a flag. And so if it's a flag and I'm going to connect this with the prior high here, we're breaking out of a flag. It's a little lower in its pattern. Seasonality has this bump here, but the trend is kind of going higher. I'll look down here. I can see a CPR signal fired, a breakout and a momentum coming out of a squeeze. This is a John Person PPS buy signal. That's not a standard part of the product. It's an add-on. This is showing the relative strength of the spider of this stock versus the spider versus with a moving average. The fact it's breaking out is showing relative strength performance versus the S&P for CRS, and OBV hasn't quite crossed its moving average. It's not perfect, but it's not bad looking. Boeing, I'd rather see it cross the 50, and you could see seasonality. McKesson, I talked about McKesson over the week last week about in a volatile period of time, this class, which would be McKesson, Cardinal, and Cencora, are great things when the market's selling off. They'll hold up. They're operating machines. Now, this doesn't look great. And we had, of course, I talked about McKesson on these two dates. And then it had the hard sell-off Thursday, which was reversed and closed almost back at Thursday's high on Friday. What makes me love McKesson? You got to know when to hold them, got to know when to fold them. In Ian's favorite words, sometimes you just got to pinch your nose and hold on because this is a stock that is not a tech name. And in the last 6 years, it's gone from 150 to 800. I think that's a good return. LEU is one that we've been in. This is a stock that's involved, I guess it's probably in the energy space with nuclear medicine, nuclear. The fundamentals, if we even have them, it has teeny weeny earnings, but it's very volatile. You'll have a couple of earnings that are gigantic. It's had a lot of earnings surprises. On the revenue, not as much revenue as you think looking at those earnings. Trades at a multiple of 400. Its story is the nuclear power to support data centers. To me, it looks kind of expensive. Excuse me. ATI is another steel stock. Let's see, earnings last 323, 50, 23. We'll have 75 cents on November 4th versus 60 cents. So that's a 25% of the prior numbers move. Revenues kind of flat. Again, you get these periods with big moves from time to time. Doesn't pay a dividend. Why I like this stock? Broke down, little bit of a base, breaking here above the 50. It's got a PPS buy signal, had good volume, has a CPR volume breakup momentum from a squeeze, and both the relative strength and the OBV have crossed above. So a lot that I like here, and that's one of my favorite stocks of the week. And then we're going to come back to Woodward again, but this is another one, big uptrend, pullback and a breakout. Took out the 50, took out trendline resistance, two good volume days, and this is my secret signal. It's a double momentum when you get two dots in a row. It is by far my best signal for when a stock's about to have a big move. I pay a lot of attention to that. So I like WWD a lot. Another way I might look at these, let's just look at by percentage move. Now I've already taken out the cheap stocks, which will always poison this type of a view. There you go. BIAF, who knows? I'll go over to the news file. Um, Clinical value of SciPath Lung, so it's a molecular testing company like Tempest, but much smaller. And I'll just go down these and see if anything comes out at me and says, buy me. There's CRS, there's ATI, NeoGenomics, another molecular testing, MRCY. This one, I believe they're involved in making supercomputers or computers for data centers, etc., kind of like SMCI without the fraud accusations. Big earnings, massive earnings growth, but it also trades at a PE of 240, kind of, um, yeah, a little expensive, but breaking out of a flag here. So that's how I would do top-down investing. We looked at a bunch of different stocks. Um, Other way of looking at it is to look at bottoms up. So let's just kill this. Come on. All right, so we're just going to move over to the impulse list. All right, we're now on the impulse list, which is at 3,748 stocks. I showed you top-down analysis. Now I'm going to show you some bottoms up. Now I've looked at already over 1,000 stocks this weekend. And what I'm looking for setups, and I'm looking for stocks and setups that are starting to move. So I'm looking at some type of an impulse, whether it's volume, breakout, chart pattern, momentum, gaps that say we're not just basing, we're starting to wake up and move. And then I thought to myself, why do I want to look at stocks to find the ones that are moving that are in a good setup? Why don't I look at the smaller number of stocks that are giving me those impulses of moving, volume breakout, gaps, momentum, other signals, and then look at those stocks and see if any of them have a viable setup. And I found that it's a lot more fruitful than looking at stocks that are just basing, perhaps. So this is what I do in the impulse list. So I like pullbacks in an uptrend. So I'm going to apply certain things, a filter of price and volume. I have a filter for pullback and uptrends, and then I'm going to hit OK. And now I've got 357 stocks. I'm going to rank them by the number of impulses. And let's take a look. MAC, real estate, the Master Rich Company, good seasonality coming in. Nice channel here. Bit of a pullback and a reversal. And look at the volume that came in on Friday. There's my CPR. Gap, volume, breakout, momentum. Relative strength and OBV crossing. Do they just have earnings? Earnings were August 11th, so that was 2 weeks ago. Don't know what it was. Was there some news on this? Shopping centers, e-commerce adoption, despite e-commerce. Has not been my favorite place. Does it pay a dividend? Pays just a 3.31%. It and Simon Properties, but despite everybody thinking that big shopping centers are gone, they're still very busy in Florida, and it's not just for the free air conditioning. EA, we know, is in a leverage buyout discussion or take private. XIFR is a infrastructure ETF in it. And I thought that was interesting. In fact, I'll show you one that I like that pays an 11% dividend or so in the infrastructure side. VIR is a healthcare stock, too low for me. VIV, gosh, break above this line. It's been basing now since May. That would be interesting. Take Two had a nice day, probably related to Electronic Arts. Run actually getting ready to break out of a flag, perhaps. Had a CPR, volume breakout momentum out of the squeeze, good relative strength at OBV. RJF, who's this Raymond James Financials, nice uptrend. And then you'll see the gold and silver stocks are all at multi-year highs and might be a little hard to get back into some of them. Hexel, I think it does industrials, but it's also a defense stock. Kind of like this breakout here. There's a John Person buy, good volume. CPR, volume breakout momentum coming out of a squeeze, relative strength at OBV. So I can go through this list. Um, and I do before I do the video to find the best of the best. And then the other thing I like to do is if I told you that 2-day momentum is such a good thing, why don't we just look for it? So here's a 2-day Momo up. Let's price and volume filter it. Let's hit OK. We got just a couple. So what you have here is Solar Run kind of flagging there. You see the two above the yellow line. Those are my double momentum. UNFI is some food grocer. Um, Nice uptrend. Had pulled back to the 50. It held in a breakout here. CAPR, Capricorn Therapeutics. It has a signal. It's cheap biotech, probably not interesting to me. This one is. Here's Woodward again. I think I mentioned we'd see it again. There's that two dots out of a squeeze. Relative strength at OBV looking good. And I don't know if it has enough volume in the options, but if I was to work up one to buy on Monday, this would be the one. And then this is State Street, another one that's going in a sideways consolidation that looks like it's knocking on the door to break out, and a breakout above this line I think would be very interesting as well. So there you go, 41 minutes because I talk too much because I'm teaching. Love to have you guys join me in Florida. I promise you'll leave there with thinking you got your money's worth. Um, and you get to go for a ride on Stock the Dock and Docks the Boat as long as it's not raining for a dinner cruise. But love to have you join me. I hope you like this. I will do part two right now, which will be an options workup, and I'm going to look and see if there's enough volume of options at WWD. If not, some of the stock, I'll go through some of my favorite stocks. I pruned it down to what I call my premier buy list, premier picks, and we'll take a look at, take off the filter, at some of the stocks in my premier list, and then I'll work one of them up. You all have an awesome rest of the weekend, and look for video two to come out soon.